In this segment, we're going to talk about budgets and fund accounting. I know fund accounting may not be fun, but we're going to talk about why fund accounting is important and how it connects into budgets. First of all, here's an example of what a fund structure might look like. This is a fairly generic example, but you can see there's lots of boxes on that page. It can seem a bit intimidating at first, but let's take a quick moment and kind of look at what's here and why. First of all, why do we use funds? Well, the first answer is because we have to. Generally accepted accounting principles, or GAAP, for governments require that we keep distinct activities independent of each other through the use of various funds. And the laws in Washington require that we don't allow one fund to benefit from the appropriations of another unjustly. We'll talk more about that in a moment. But secondly, you should. Cities operate many different kinds of businesses, independent lines of business. Sometimes they even conflict with each other, but that's the nature of running a city. And how do we keep these separate? How do we make sure that the resources that are developed and provided for a certain line of business are only used for that line of business? Well, that's where fund accounting comes in. And certain revenues, say for instance grants, want to be very careful that they are only being used on the kinds of things that we contracted to receive those grant monies for. And so again, another reason why it's very important to have the credibility with those grant agencies that we'll use the money only for the kinds of things that we promise to use them for. Now, one of the drawbacks of fund accounting is that as money moves back and forth between these various funds, we end up with some double counting. And if you have concerns or questions about that, it'd be good to ask within your city hall about how to sort through that and understand it better, because it can be confusing. But it's something to be aware of and to keep in mind. Let's look at the different kinds of funds that we use in government accounting. Well, first of all, the most restrictive type is called a fiduciary fund. And as the name implies, this isn't your money. Instead, you're being entrusted with these monies. You'll oftentimes hear this known as a trust fund. And examples of these might be pension funds or monies that have been donated to you for a specific purpose. And again, this isn't your money. You're being entrusted with these monies to accomplish that purpose. As a result, you won't see an operating statement. There's not income and expenses that are accrued to the organization from these. These are, again, not your money. So oftentimes budgets aren't really required for trust funds, but again, I think a budget is a good idea as a management tool. Another restrictive kind of budget or fund is a proprietary fund. And these are where the sources of revenue and the nature of the activity is a business-like activity. The sources are often charges and fees for services. And there's two types of proprietary funds. There's ones that are internal to your organization, internal service funds. Examples would be fleets, information technology, insurance accounts, things of that sort. And then external customers, where you're providing services to those who are outside of the confines of your city hall. For instance, a utility fund or a golf course or an airport. Those are typical examples of enterprise funds. Again, those revenues are restricted for uses on activities that benefit those funds, and we want to keep that separate. So then as we get a little less restrictive, we get into general government type funds. Again, these are contrasted to business activity, so the non-business, if you will, activity type funds. There's still some restrictions here. For instance, capital project funds, by their nature, are to account for activities that are being used to build capital projects, hence the name. Debt service funds are to keep track of both the proceeds from debt activity and then also the payment of the people who've loaned us those proceeds, the bond payments and things of that sort for debt service funds. And so again, those resources are restricted to those kinds of purposes. There are special revenue type funds. And these are where the nature of the revenue itself is really of a general government nature. It's not a business activity, but yet where the revenue is derived from has provided some restrictions on what those revenues can be used for. And so they're general government type activities, but with restrictions. And we use these types of funds for things like hotel motel taxes, real estate excise taxes, and things of that nature. Grants are often accounted for in a special revenue fund. And then lastly, the least restrictive form is the general fund, or sometimes you'll hear it called the current expense fund. And this is where basically you can use these resources for any legal governmental purpose, including the purposes of the other funds. So you can oftentimes see transfers from the general fund to the other funds. This is typically where a lot of focus of a budget is seen, because many times the revenues to these funds are taxes in nature, and the expenses are the kinds of general purpose types of things we do to benefit the community: public safety, parks, planning for future improvements, and things of that nature. So this is where oftentimes we spend a lot of our time in budget. Each fund requires a different budget. Some funds, as I said earlier, don't require a budget, and you want to check with your city attorney to be clear about his opinion on that, because some opinions do differ. And then some have perpetual budgets. When you passed an ordinance and authorized the borrowing of bonds and made a promise to repay those bonds in the future over the next, say, 20 years, you essentially created the appropriation for those repayments by virtue of that ordinance. And again, your city attorney may differ. You want to check with them first, but I would consider that a perpetual budget, and you can choose to include it in your budget or not. But again, remember that budgets oftentimes are important for management purposes. So if there's a question, go ahead and adopt a budget for it and use it to track your activity and make sure that you're managing your finances responsibly. One last thought. Remember, just because you have budget doesn't mean you necessarily have the cash to provide for that budget. Budgets are always based on revenue estimates, and then as soon as the budget period begins, you begin collecting those revenues, and you should be getting some insight as to how those collections are comparing to your estimates. And if the collections are not keeping pace with estimates and you don't have the cash to cover those expenditures, then just because you have budget doesn't mean that you should proceed with expending monies as was originally provided for in the budget. Here are a couple of examples of some of the kinds of reports that you might use to evaluate this and be able to track not only historically, as in some of these solid lines, but also track compared to budget, which is the dashed line on this report. And that was a cash flow report. And here's a report, for instance, with both the expense, which is the black line, and the revenues, which is the green line, compared to budget for a proprietary type fund, to help you keep track of how the actual activity is comparing to what you anticipated when you adopted your budget.